Good morning, folks. It is Wednesday, the 6th of May, 2015. It's 8:07 a.m. Chicago time. I apologize for the delay. Time is valuable before the market opens. Having some trouble with my charts not behaving properly. Seems like after a couple of updates, I've lost some data. So was trying to recreate it, but it doesn't look like it's going to happen. So we'll go with what I have and some still shots that I got from people in the chat room. So let's look at the overnight news. The major European PMI services data generally improved in April. It just came out this morning. Bond yields volatility endures. We're seeing a Bund moving around a fair amount. ECB's non-monetary policy meeting agenda today said to include Greek collateral haircuts. Greece makes its IMF payment of 200 million euros as expected. European stocks lifted overnight by PMI data. Again, I don't trust what I see in my charts. I need to do a purge of the data and re-download it as soon as we're done. But I think my European data is still pretty good. The Euro stocks sold off a little bit, tested value low from yesterday, and have climbed since. Um, Fed's Kosher Lakota, who's a non-voter, repeated his call for the Fed to hold off raising rates until next year. Yesterday, after the close, API crude oil inventory showed first drawdown in stockpiles since January 6th. Uh, Also, the weaker dollar is supporting the move up in crude oil. So crude oil is on this tear. It has hit its target of 60.66 that I've been talking about for a couple sessions now, and that's done. Also, a reminder that Tokyo is still on holiday. Remember, Japan provides a large amount of the world's liquidity, so it does have an influence on our markets, especially treasuries and so on. Looking ahead for today, we got um, we got ADP employment this morning. Came in at 169,000 versus 200,000 expected, lowest since January of 2014. So the ADP is intended to be a preview into the non-farm payrolls number in 2 days on Friday morning, and it's weaker. Non-farm productivity came out also negative 1.9 in line. And then looking ahead, we have crude oil inventories at 9:30, expecting 1.2 million barrels positive. Cushing, negative 350,000 barrels. U.S. gasoline inventories plus 500,000 barrels. U.S. distillate inventory expected to be at zero. And your refinery utilization at 0.5, 0.1 was prior. At 10 o'clock today, 10 Central, JP Morgan releases its global services PMI and global composite PMI as well. As far as speakers, 8:15, just 5 minutes from now, Fed's Yellen and IMF's Lagarde are to speak on a panel in Washington. That's probably going to be heavily covered. And then we're looking at 12:15 Central today. Fed's George, a non-voting hawk, speaks on credit markets on a panel in Washington. And at 12:30, we have Fed's Lockhart speaking on monetary policy in Louisiana. Fed's Lockhart is a voting dove. I want to say let's look at the markets, but again, uh, I don't have very good charts today, so I'm borrowing a chart from one of our traders. Um, Yesterday, in yesterday's Trader Bite, I outlined, I used a large market profile chart. Let me pull that up. So this chart doesn't show it, but I showed what we've done over the months, the last couple months, showing February being a very wide-ranging uh, month, with March being an inside month, April putting in new highs, higher. The market has been one time framing up since February on a monthly basis, and I did outline the fact that we were trading up in this high volume node on the monthly, and that it's really important to note the 83 quarter, 83 half area on your charts as the main test target below. And yesterday, the market did get to it. We pushed down to 81.50. Note that the point of control yesterday was left at the 84 even. We closed at 84 even. Point of control shifting to the low a day. Yesterday was a typical trend day profile. No consensus on value. The value area on the profile is meaningless for us today. But knowing that the volume, that the point of control shifted at the end of the night, this portends further lows. However, we do have a major support area here in that composite low volume node. So the market did exactly what, as expected by Hypo One yesterday. We opened below the prior day. This is the last. This here is the last day session. This was the overnight session yesterday, and then we opened just below the day session. The expectation was for a test up into the prior value. 2106 was the estimate. It ended up pushing a little bit higher into the closing price of 2109. 2109 touched it to the tick, and then 2109 quarter, and then rotated down. Hypo One was for responsive buying into the profile, a test, and then rotation down, and then expected 95 and a quarter to test. And here it is. It just rolled over. Just a beautiful, beautiful setup, beautiful play. It rolled over, pushed down to 97 and a quarter, put in a double bottom at the low, pulled back to the mid, although the mid is a little higher here because of the overnight session. I think the other chart that was sent to me, it's also overnight. Hang on. Let's see. So here's another look. Yeah, okay, so this is the day session. And you can see us pushing back into the 2109 quarter, and then we rotated down. We put in a double bottom at the IB low here, pulled all the way back to the mid, and then we finally got the rotation down. I warned folks to be careful here. It's not likely to be done. 95 and a quarter had not been tested yet, and it blew right through here and pushed through down into the 2090 for another rotation back in towards the IB, and then continue to move lower towards our target of 83 and a quarter. Really a perfect play. They don't always happen that way. I'm not going to sit here and tell you that it's always like this, but it's nice when it is. So overall, Delta was getting hit pretty good yesterday. We did have a trending delta, just barely breaking into the trending delta zone. So sellers were definitely active. A pretty wide day in range, about 27.75 points or so, and the market basically is pulling back just as anticipated. And I covered that on daytradingradio.com the other day on my weekly overview. The overnight session got a nice pop into the European Open, and then started to sell off, and it tested the yesterday's low by one tick, with the point of control being down here with a double bottom on a 15-minute chart right here with these two wicks. We expect a lower low. And that's what I was looking for on the overnight session, looking for 78 to be tested. But it took it out by one tick for another double bottom with a failed auction push back up. That was a pretty decent rotation, 10 points almost on the 15-minute on the overnight. So pretty decent strength there. And a little bit of a concern, actually. I know this is a big support area, as I said earlier, and as I set up yesterday. Uh, but this type of reaction here creates a conflict. The low is fairly weak with the double bottom here. My statistically, I would be targeting this low to be broken for a push to 78.75 at least to close the naked point of control. But the way this is shaped up, it's almost like a V bottom with multiple highs. So now we have a weak high on the overnight as well. That creates a conflict. We're inside of a trend day range. So this morning's main hypothesis has to be to wait for sellers to step in above 92.50. Otherwise, I'm looking to go short, targeting the 81 quarter and the break of this week low, even though it's a one tick failed auction. So that's what I'm looking for today, 78.75 as the target below. If we open and chop around in this area and then start to rise up, I'm going to be looking for 95 and a quarter on the upside first, and then we're looking at 2101 as the next area up to be tested. However, we're in a large balance zone as we have been since February 13th, and it's unfortunate I can't show you my charts here with the composites, but in general, um, you know, this is another pullback on a trending market. So lower prices only happen to entice buyers. If buyers are not there, lower prices will continue to happen. And so this one tick failed auction is a shot across the bow for anybody who's short. But we'll see how the market handles it this morning. There isn't anything on deck this morning that's likely to push us around too much. I don't see anything that would cause a lot of volatility. Maybe Yellen's comments when they come out. So I'm not sure, but I need to. Today's hypo has to be to just sit and wait and find out which one of these week high or the week low overnight is taken out. We're basically opening at 2089 and a quarter, which is right up against the overnight point of control. The market is in balance overnight. Overnight inventory is slightly long, so we may see a flush down on the open, but overall, it's very, very difficult to predict which side has the upper hand here. Okay. One of the comments I made on Twitter yesterday is the rotation down. The rotation down here on the 15-minute was impulsive. It was about 12 points, and then it was followed by another impulsive rotation of 12 points. The normal behavior of the market, and this is not always true, but in general, the market moves in waves. This is where Elliott wave comes from and all these other things. But, looking at this for years and years and years, and I'm not an Elliott waver. I don't mark my charts with ABCs and 1, 2, 3, 4, 5s and all that stuff. But I've seen a simple, basically a good part of my career was built on this simple idea that the first move is not, if it's impulsive, if it's very large, then it's usually followed by a completion or extension move. And when you have a move that is 12 points followed by a move that's 12 points, then that second move should have been a lot smaller, is usually a lot smaller. I shouldn't have said should have been. Don't like that word in trading. But the second move is expected to be a lot smaller, but still to take out the prior low. But if the second move is the same magnitude, rotation size as the first move, you're likely to get another move. And that's what I was looking for yesterday on the short into 83 quarter 83.50. So that's how that works. In general, when we have an impulsive move like you see here, in general, we take out that high, we pull back and take out that high, and there's plenty of opportunity in this second move. I doubt that many can, and I definitely cannot predict when this first push happens. It's somewhat predictable using volume profiling when we have compression in a tight range and we have stats that support the market breaking one way or another. I can often take advantage of a good portion of that first move, but in general, I'm not an initiator of moves. The higher time frame does that, and so oftentimes I'll miss the first push, but it doesn't mean I don't. That's why I don't get the fear of missing out, because I just wait. I stay clear and I wait for the next move to happen, and I try to take advantage of that second move. Anyway, I don't have much more to talk about simply because my charts are all flubbed up here. But I leave you with that. I've gotten a ton of emails on last Friday's webinar, people asking for the recording and why I'm not releasing the recording and so on. And generally, those were the webinar is for Stage 5's traders, those who committed to being at stage 5 and are supporting the infrastructure and the services we're building for traders. The idea here with stage 5 is to build a brokerage, an online brokerage that is built for traders by traders using prop ideas. We cannot do prop online, of course, not yet, but those people who committed to stage 5 are there, and you need a broker anyway, and stage 5's brokers will match commissions and so on to bring you on. So we reserve the weekly webinars and keep those for 2 weeks on a recording for those traders. But I decided to open the Friday discussion up to the public and said that the recording would be available to stage 5 only. I don't think that's fair. In thinking about it and seeing the number of emails that I've gotten and requests that I've gotten for it, I don't think that's fair. And so I'm going to post that recording online on my website this afternoon, and I'll shoot the link out to everyone who wants it. It'll also be on the video archive of my site, futurestrader71.com. All right, that's a handful of that's a mouthful of stuff, but I'm not going to answer the emails. I'm just going to put out the video, and it'll be available for you to watch. Why is this video important? It isn't. It's just another AAQ session, except on this video I put everything together as far as the pre-market prep and then actually looking at the trades that were taken on Friday in the NQ and why they were initiated. And it kind of, for many people, it has helped put a lot of these bits of information together into an actionable plan, just the way I've been doing for the last, I don't know how many years. So that's why it's something you might want to watch. I'll leave you with that. Good luck, and I'll catch you tomorrow.